Hello students. Today our topic is responsibility of auditors under Companies Act 2013 for your paper BCM 601 Auditing and Corporate Governance. So these are the topics of discussion today. I will give a brief on Companies Act 2013. Then there will be different provisions relating to auditors' duties and responsibilities and their powers, and at last the conclusion. So let's start about something about the Companies Act. Now, Companies Act 2013 has brought a lot of revolutionary changes relating to appointment, disqualification, and many other new terms in the auditor. There is also penalties, something which got a special status and makes a auditor if they go bankrupt. Now, all these penalties and some special provisions under 2013, which is actually enforced by the three scandals in India, that is the Satyam computer scandal, then the Sharda scam, and one of the most important, the Sharda scam. Now we will talk about the different provisions relating to auditors' responsibilities. Now all these provisions are actually explained in Companies Act 2013 under section 143, which is actually the powers and duties of auditors and auditing standards. Now, we know that 144 and 146 is related with the different services and about the general meetings. Now, 143 is basically included in this 1.4 section after the removal, resignation, and remuneration of auditors. So, along with the appointment, the removal, the recognition, the resignation, and remuneration, there are some powers and duties and auditor which they should do for the company. Now these are the basic things under from one section 140s. There is starting with the 139, the appointment, then the rotation of auditors, because we know the rotation means the same auditor will not do the same kind of work or in the same branches of a company. They will be moving around, the responsibility will get changes, their designation will get changes. So mainly it's like kind of internal check where the duty of a single or maybe a junior auditor will be verified by some other auditors or some other junior accountants or some senior financial officers. Then maybe a senior auditor officer may go to for like some cooling off period when for some months or for maybe a 2 or 3 years they will be in a period where they will not be under any designation. They will be the employees of the company. They will get their salary and the other formalities, but they will not hold any designation. So that is known as the cooling off period. Then obviously we have the removal and resignation of the auditors, depending on different circumstances. This removal and resignation of the auditors depends on between the company to company. If it is a government company, then it's totally dependent on the power of the government, maybe a state or central. And if it is a private company, then within the verified parameters of the government, they can do their policies. After that, there will be qualifications and disqualifications, and then there will be remuneration. Now, out of these things, the auditing refers. We are talking about the auditors, their duties. The first thing we know what is the auditing is. So we all know it's a systematic examination of books of accounts, documents, and vouchers, and to ascertain how far our financial statements present a true and fair view of the concern. The main complex is ensuring that the books of accounts are properly maintained by the entity as required by the law. So we all know what the accounts is. So by when we are doing the accounts, so we are going to prepare some financial reports. and those reports are the very important part of the company because they can explain or they can ascertain the actual financial position, or maybe we can say um, they are the main things which the internal users and the external users will get. The loan givers, the government, the banks, the borrowers, the customers, the vendors, the employees. So everyone is looking on those financial reports. What is the actual condition of the company? Because there are some persons who will invest on the company, so they are more or less interested on the share position or the profit, and the person who will give the loan or who will get the loan from the company, more or less they are looking for the asset liabilities condition, the liquidity condition of the company. The bank will go for the liquidity condition, and the customers who are going to means buy some goods from the products or services from the company, so they're also going for the product, the product headlines, and their market situation, their demand in the market, and their profit scenario. So all these things there are different things which are related with the accounts and the financial reports. Now it is the duty of the auditor to see, to verify that they can ensure that these financial statements are actually showing the true and fair view of the concern. Otherwise those reports will not get any kind of meaning to the parties. Then the auditor is a person, obviously an independent person. Then maybe the external auditor, and then the internal auditor. The internal auditor may be the employee of the company and should be the employee of the company, who will do all the accounting as well as the auditing part of the company. Mainly on the internal auditor, the internal check and the internal control depends, and the external auditor is the person who is coming from the government, who is actually who will check the actual position of the company, and who will actually give his opinion or reports. Now, the experts who possess knowledge in the field of auditing, assurance, and taxation, who fall within the definition of Chartered Accountants Act 1949, is an auditor. So, an auditor, according to the Chartered Accountant Act 1949, should be a chartered accountant. And external auditors express their own opinions on whether the financial statements of the company in question are free of material and misstatements. So he should know and he should detect all the errors and frauds of the company on the financial reports, and he can show cause and he can see and give the qualified or unqualified, unjustified report, depending on those documents and the facts. So now we are going to the main part, the powers and duties of the auditor under section 143. Now, first is the duty to inquire. Now, the auditor has always the right to inspect books of accounts, the vouchers, at all times relating to company, irrespective of the location. They can seek information from the officers and explanation in relevant matters which he feels so. So he has a right. He has a right to inquire on anything or everything of the company which is related directly or indirectly with the books of accounts. Now, the areas on which he should give them his main focus are the loans and advances, um, different fictitious entries, then sale of investments not less than the book value, then the deposits loans, then the personal expenses, which is charged against the revenue, and the issue of shares considered in kind. So look, these are the areas where actually the fraud occurs. These actually the areas where the embezzlement will take place. The company can easily hide their profit. The company can easily hide their the situations in these areas. The personal expense sections, the loan section. So they can take the fake loans. They can give fake loans. They can hide the interest. They can hide their sale of investment, which is actually the less than the book value, but not actually happening in that, and the other the shares of consideration or in kind. So these are the areas which an auditor should inquire. He should look after all the relevant documents, the relevant emails, the everything, the books of accounts, the vouchers, the agreements, the contracts, everything, to put focus on these areas. And obviously, the opinion of the research committee of the ICI of section 140 subsection 1 is that the auditor is not required to report on the matter specified unless, yes, unless he has any special comments to make on any of the items referred to therein. He is satisfied as a result of the inquiries, there is no duty to report it. Now, if he is satisfied, so there is no problem in that. But if he is not satisfied, if he is finding something else is going on there, something wrong is going on there, then he should first to inquire, And if he is not satisfied with the inquiry, or whatever with the answers the internal accountant or the internal control committee is giving to him, he may give some reports on his report, on his opinion. Then obviously the subsection 2 of the 143 section is the duty of the report. Now the auditor should report to the company because he is liable to do that on the accounts examined by him in respect of the financial statement that are required to be laid before the company to general meeting. So we all know what the general meeting is, where the company will write down these audited reports in front of all the shareholders and the other parties, interested parties. So we should mention that in those reports, and the report whether the company has complied with the accounting standards, auditing standards, which depict the true and fair view of the status affairs of the company through his financial statements. So not only we are talking about here the accounting standards, there are also a lot of auditing standards which a company should maintain if they are going to run the business properly. And it is the duty, is one of the main duty of the auditor, whether he should look after these matters, whether the company is maintaining those accounting standards or auditing standards or not. So it's not only that he will get a he will give a good report if the company is going on with some accounting standards and principles and conventions. But if they are not maintaining the auditing standards, he should give some unqualified reports based on that condition. Now, what are the contents the report should have? It should be the reporting the impact of the financial statements. Now, what is the impact? Maybe the positive or the negative. The negative means it is not actually showing the actual financial position of the company, so it's not true in nature. Then the evidence what the audit is getting is proper or not, is enough to give any proper opinion on the statements or not. And the telling of profit and loss account along with the balance sheet to the books of accounts maintained by the company. So these are the basic things, the basic contents of an auditor's report. Then obviously there should be some good observations and comments, and the report whether any director is disqualified from being appointed as a director under the section 164 subsection 2. Then whether adequate internal finance controls have placed and operating effectiveness of such controls. Disclosing the impact of any pending litigation, if any, in the financial statements. So any previous cases are out there or not. Then in delay in transferring the amount to the Investors Education and Protection Fund, means IEPF, by the company. So these are the areas where auditor should look before stating any opinion in the report. So actually, these are not the only things. So there are a lot of things which an auditor should look after, but these are the areas where the company can hide their things. So some of the companies not giving the proper amount for the employees fund. Some of them is actually disqualified with a person without any proper ground, or maybe they're continuing with a person who is actually going to be disqualified for any previous actions, and there may be the case of the disclosing of any financial statements or reports. So these are the areas that the audit report should contain their opinion. Then there is the qualified report. After all these verifications and valuations and findings and show causes, in areas which the auditor feels that has an inadequacy or negative information, he should disclose the same in his report, stating the reasons of such reservation and negative report. So it is a qualified report, so that means there is something. So he has found something wrong is going on in the company. So he should mention that properly with the proper evidence, that why he is thinking, why he is smelling such things, and what are the causes, maybe what are the causes, maybe what are the findings which are maybe uh, behind those reasons. You should mention that in the qualified report. Now, if it is a government company, that's a big thing, which is actually mainly controlled by the CAG, means the Comptroller of Auditor General of India. The government company auditor shall be appointed by CAG, and who may direct the auditor the manner in which the auditor may be continued, and the report impact of financial statements in account of directions followed by the auditors as per the CAG. So all the guidelines and all the rules and all the methods are hereby maintained by the CAG. So it's not controlled by any other the private firms or etc. Then there is a branch audit, obviously. So if the company has multiple branches, then they can conduct the branch audit. The auditor shall perform by company auditor, maybe any other qualified person. And such branch auditor should prepare a report on the books of accounts of the branch audited by him and send a copy of such report to the company auditor. So if the company auditor is staying there, look at this picture. If he's the chairperson, so there may be a lot of branches, and then we saw a lot of other persons who are actually doing the branch audit. Then maybe they are the chartered accountants, or maybe not, or maybe they are the part of the CFO, the chief financial officer, or maybe they are the some persons who are actually having some knowledge on the audit and accounts. Now we are coming to the end. There is the compliance of the accounting standard. The compliance of standards for auditing has been made mandatory. So it is the notification of the ICAI, the compliance of standards auditing has to be maintained by the other companies. Any deviation should be explained with reasons as to why the auditor update should be made clear. Now, if the company can show that, okay, these are the reasons, these are the facts or the grounds on which I have deviated from the auditing standards, and if that is logical in nature, then the auditor can give some unqualified report. Means it's not a bad thing. And reference to guidance notes and other materials released by the ICAI from time to time, and seek help from the fellow members of the ICAI on certain aspects where he is unable to form an opinion. So now the reporting section, the central government may, in consultation with the NFRA, direct that the auditor report in case of special class of the companies shall include a statement on such matters as may be specified thereon. So there may be some special cases for the NFRA, then we should be mentioned in the auditor's reports with the guidance or with the reporting standards of the central government. Then we are coming to the fraud. That is the main part of the audit, to detect and the fraud. So against the company by an audit officer or the employer of the company, they can report the fraud. Reporting the matter immediately to the central government if such fraud amounts to be 1 crore or above. It does not mean that if it is less than 1 crore, the auditor will not report it to the government. So they will mention that in those qualified statements. But if it is more than 1 crore, it is going to be a huge one. Which can affect the economy of the share market. In that case, it's mandatory, compulsory for the auditor to submit a report or a photocopy of the report to the central government. The auditor should first intimate the board of the directors, the BOD, the audit committee, immediately within the 2 days of knowing about the fraud, and seeking the reply observations within 45 days. So it's not actually, it's written in the theory that he will send the report in 2 days, but actually in real life it took months to make those evidence and documents with the support of the auditor's opinion, and it takes more months, means more than the 45 days to get the report. So actually there are a lot of legal things are around there. Then on receipt of such report, they will forward that to the audit committee. The auditor's comments on such reply or observations to the central government within 15 days. And in case there is no reply, he will send the audit report along with a note containing the details of his report that was earlier forwarded to the BOD, the Board of Directors Committee, for which he has failed to receive any comments or observations. So actually the case is not closed here. So unless and otherwise the case is closed, or unless and otherwise the central government is interacting, it will get continued. Now, that is a reporting of the good faith. However, the auditor will not consider a guilty of a professional misconduct if he does not duty in good faith. However, the duty of confidentiality will not be affected in case of auditor reports such matters to central government in good faith as per the second schedule of the Chartered Accountant Act 1943. And that's the oath of the audit. That whatever you are doing, whatever you are seeing, whatever you are showing, it should be in the good faith, and you should keep the trust of the central government as well as the persons, means the shareholders, means the normal persons. Now, this is always the applicability of the CS and CMA, means the chartered accountant and the cost accountant and the company secretary. Now there are penalties. Any non-compliance with any provisions, the CA, the CS, and the cost auditor shall be punishable with a fine which shall not be less than rupees 1 lakh, but which can be extended rupees 25 lakhs, and within the new law, Criminal Act, there can be imprisonment and the cancellation of the registration of the person. So hope we have understood something about the auditor's responsibilities and the duties and powers. So in the next class, we will do the appointment of the auditors. So till then, bye-bye.